The market is at a critical juncture, and the Fed's latest projection could be the deciding factor between the short-term bounce or continued downside. Let's break down the Fed's outlook, what it means for the stocks, and why the downside scenario might still be most likely outcome. So let me just open up the last Fed meeting. We have it here. So if we look into the December meeting, the federal fund rate projection were kept same for the 2024, while the cut was probable, but we saw a hold. And for 2025, the rate projection were increased from 3.4 to 3.9. Let's look at how it affected the markets. So we were around this point at that time, and we went down after that, and then we formed a range because of because there were several factors, and mostly it was due to the interest rate projection. And now what we are seeing, this downside, this correction you can call, is due to Trump administrative policies. I mean, they have been like a seesaw for the markets, and we can see that how much down we are right now after the Fed's interest rate blow to our face. Now we got a Trump administrative issues. So if you look into the economic projection of the Fed, what are we looking at in this meeting? Like it's on the horizon today. First of all, we can see for the GDP, it is going to be bad. Most probable outcome, I'm telling you, because the Trump administration has placed tariffs on their trading partners. How can you expect real GDP to come up? But if somehow it comes up, then we have an unemployment rate. Now, this is a very important economic indicator because it just gives you how much the economy is progressing and how the living standards of the people is increasing. And because of the layoff of government jobs and institutions also reluctant to recruit new people, we might also see a decrease. Like 4.3 is a 2025 projection, we might get like 4 to 4.4 to 4.5, I believe, and that's due to the layoff and also the inflationary conditions we are in. Same goes for inflation. Due to tariffs, the inflation and the prices for the goods have increased significantly. So I believe inflation is going to come up. If now the second scenario, let's plan out the second scenario. Everything comes in line towards the more bullish side. See, if you look into the S&P, we saw a bounce on Monday, on Friday from this region, which we already projected in our Discord group. If you can see here, we have weekly reports. Every week we give out new reports, and we can see this report here in which we saw this upside on the, in which we projected the previous report, not this one. But still, we just gives a heads up for a short-term trade on Monday. Let me just be clear. Here, like here, we could have bought S&P and look for the trend line towards the upside, sold some of our position and let others run, which would have ultimately break even here. And then we would have looked forward to increasing the position after the economic projections comes in good. Now, if we get a good economic projection, we will break this trend line for sure and move towards the upside until we get further information from the Trump administration regarding tariffs. If that is not the case, the most probable outcome is simply we might, wait a minute, okay, we might just get down from this trend line and either move down towards the bottom or even just form another range at this side. Now that is also going to be bad for the equities. Now, if you get a good projection, we might break from this region and you can just get into equities for medium term opportunity. I have posted some of the opportunities on my server. Here we can see these are the stocks with the great fundamentals. We post these mostly twice to three times a week, and these are premium reports containing all qualitative and quantitative information about certain stocks that are in their best position. So let's look into the meeting again here. Yeah, so the second thing we want to look at is participant assessment. And this dot plot is very important, very crucial. I mean, because we don't know what the interest rate would come out. Like, even Feds are confused right now as they also can't project the situation. The Powell came out on like 2 weeks earlier and said it's hard to project the future of the United States economy due to the Trump policies. And we are seeing here that 3.9 is the projection. I mean, it can go down if everything comes in bad, but there is also a risk to inflation. So it depends on the magnitude of the shift in the projection. And if you look here, for 2025, projected Fed interest rate is going to be around 3.9, which is good. But if we got few dots up, this is going to be bad, guys. This would be like adding salt to your wounds and the market is going to go down again. But if you got few dot plots towards the downside, this is going to be very bullish for the markets and would be a good sign, I mean, in general. So that's what we are looking for in this latest economic meeting of Fed. I hope you have a good one, and yeah, keep shining. Don't let the institutions get to you.